Okay, I wanted to walk through Scorpio Tanker's most recent quarter because it is a really just a pristine example of what can happen when you show good operating leverage in a business. And basically, operating leverage is just when you have a relatively fixed cost structure and you just run more sales, run more revenues through it. And you can often see a tremendous explosion upward in earnings for a company that has good operating leverage and then just starts to grow their revenue line. Now, the tanker sector, it's kind of it's a tough sector. It's very volatile, and the operating leverage can go in the right direction or the wrong direction, depending on where we are in the cycle. But I would say you want to look at different types of industries and try to identify where there can be operating leverage, because often this means that you're going to find a higher stock price. And you tend to see operating leverage, I mean, any business with fixed costs. So you look at like a lot of financial companies tend to have relatively fixed cost structures. You see it in industrials, a lot of capital goods companies, things like that. So you want to think about this as one of the drivers for where there might be alpha, where there might be a stock price that you can make money on. Okay, so we're just going to go through just a quick example here of operating leverage. So we're going to look at the most recent quarter here, September 2022, and you can see the revenues exploded upward, quadrupling in revenues. And like I said, this can happen with tankers. It also can happen in the opposite direction with tankers, just word to the wise. But we're going to go through their different line items in their cost structure. And we're going to see, so for example, the vessel operating costs were actually down slightly, if you look here. Voyage expenses were up. You see the D&A, so this is actually down a little bit, interestingly. And some other depreciation numbers, again, down just a little bit. And so not a lot of movement, except for this one item of voyage expenses, really in their cost structure so far at all. Now we see the G&A expenses. Now this is sort of interesting. Often you want to see, usually you would see general administrative expenses relatively fixed, but they doubled from year to year. That's kind of interesting. But then if you look at the total operating line, we saw, call it about a maybe $25-26 million increase in costs, but we had a quadrupling. So what is that? Maybe 15% or 20% increase in cost structure, but we saw a quadrupling of revenues. And so this is just a ridiculous amount of operating leverage. And you can see that we went from a slight operating loss to tremendous operating profit, 40 million loss to $305 million in operating income. And now if we go through and look at some of the financing costs, we see that their debt costs went up a little, but again, de minimis compared to the change in income. And then financial income's flattish, others doesn't move the needle that much. And so we can see the total other expense, interest and various financial expenses, were pretty flattish as well. And so you can see the net income just jumped a ton from $73 million loss to $266 million in gains. And then we scroll down here and we can see that's just translated into tremendous earnings per share growth. So again, it's kind of it's a simple idea on some level, but it can be hard to find businesses that show this type of operating leverage. Now, granted, any kind of operating leverage can be good because usually it results in significant earnings upside with a modest amount of revenue upside. And in this case, we had tremendous revenue upside and tremendous earnings upside. But you can see this at different levels with lots and lots of different types of companies. This is just an extreme example, and I wanted to walk through it in this video for you. So as always, I hope these videos are helpful. Thanks for watching.